tous. J'espère que vous allez bien.
Good morning, everyone. I hope you are well, and I hope this first day of AFIS 2020 is going well. The discussions are fruitful, rich, and meetings also rich. I am very happy anyway to see you. Thank you all for being here. I am Quentin VELLUET, Deputy Editor-in-Chief of the Economy section of Jeune Afrique, and I'm with you to animate this panel where we'll talk about fintech, innovation, regulation, and especially the balance between those three elements in order to pursue one of the most exciting sectors of development currently. An information for French speakers, this panel will be in part in English, so if you wish to take a headphone, you can. With no further ado, I invite Ziad BADDOU, Director of the Conseil Morocco. Good afternoon, Ziad, in charge of giving us a more precise idea of what is going on. Ziad, the floor is yours. Good morning, I am Ziad BADDOU. Thank you for the opportunity of this intervention. First, this rich panel, I wish to remind how lucky we are. We are to have a young, dynamic population with many opportunities on technological evolution that we can see today in Africa and around the world. And connectivity to internet. Connectivity will grow until 2030, so building new opportunities but also challenges for actors interacting in the ecosystem, especially in the banking system, in parallel with those evolutions on the use of new technologies. We also have, at a worldwide level, and Jeune Afrique too, a change in the uses and behaviors of young people, how they consume banking services. This evolution pushes actors to digitalize their services and to enter a dynamic of financial inclusion by acting in economic zones that are more enclaved. All this to better border transaction and facilitate economic transactions in Africa. When we talk about interoperability and mobile payments, it needs to be reminded that there are three main levers for this, three main levers that allow this approach. First one being infrastructure, and the second one being regulation, with participants of central banks, etc. When we talk about infrastructure, it's a highly heterogeneous approach. When we take North Africa, we concentrate more on national flows for traditional payment, on which we will add new technologies for mobile payment. So those are things we are already seeing that are more prudent here in Africa. We also have some African countries, especially in Central Africa, who are more in breaking and based on telecom operators to organize this interoperability and those mobile payments. The second challenge is regulation, so we have several commitments here. An approach that's fairly classical and prudential in Morocco, or more largely in other Maghrebian countries, in order to regulate the payment ecosystem, the fintech ecosystem, through regulations on the aspect of operational risk, especially through regulations like DSP1, DSP2, which we see in Europe, and then a more developed approach for the fintech ecosystem and banking ecosystem and mobile payment ecosystem to then adapt regulations given to the different evolutions, the goal being whatever the approach and the regulations, the goal being to operate payments instantaneously in interoperability at a national level or at an international level. This is the goal. The goal of mobile payment. Everyone is going in this direction of instantaneity and interoperability. So today, if we wish to ask useful questions to our regulators, be it central banks or the health ministry or our government in general, today we can see our central banks are in a role of regulators. So today their role is to see how they can have their role evolve toward the role of catalyst of this whole ecosystem. How can I prepare and integrate competencies and expertises at the central bank today to anticipate and better apprehend the challenges to develop this ecosystem compared to traditional actors that are also playing a role to promote the dynamism of traditional actors and fintech actors, all this in order to favor commercial exchanges in our continent, favoring financial exchange, put as many young people as possible into it, and take profit from it in our dear continent. Thank you. Thank you, Ziad. How can central banks play their role as catalyzers? How to prepare the future? And especially how to find the good balance between rigorous regulations and need of innovating and of growth. This is what we will see with our 5 panelists today. I am calling Aïda DIARRA, Senior Vice President. Imane CHARIOUI, Director for French-speaking Africa. David AKININ, founder of fintech JABU. Michael ATINGI-EGO, Deputy Governor of the Ugandan Central Bank, and Mehdi JAIR, President of Korean Northern Africa, in charge of the business unit Digital Finance. Applause again, please. Good morning, everyone, and welcome. So now let's start with no further ado, and first turning towards you, Imane, and mention the question of reconciling conformity and agility. When we talk about this panel, when we were talking about this panel a few days ago, you were saying that strict regulation is a must for the sustainability of the ecosystem. This is a perspective that's not always shared by entrepreneurs and the private sector. Can you explain why it's important for you? Good morning, everyone. It was for buzz. No, more seriously, I strongly believe that to guarantee the ecosystem's viability, we need a strict regulations, not a rigid regulation. A strict regulation that's very flexible for industry. So lately we saw a spectacular evolution of fintech during the last few years, and this evolution is driven by the adoption of clients of innovative services that fintechs are suggesting, and who says security, and who says security says conformity to a strict regulation. They wish to see that their money is managed rigorously and in true security. This is my personal point of view, which I wish to share. I also believe that fintechs do not operate in isolation. They operate in an ecosystem with classical financial institutions. And because of this, to guarantee this reliability, they need to fit the expectations. And I again want to say that strict doesn't mean rigid, but flexible according to the need. Okay, and so how is this must translate it? Well, for us, we have two marks, Sendwave and Worldremit. We operate in several countries in Africa, and in all those countries we are very close to the regulator and to the regulation. So we work that everything is meeting the regulator's expectations in order to guarantee sustainability of our services for consumers, which we include financially in a highly spectacular way with our dear partners, a few of them being here, especially our partner Kiwi, with whom we revolutioned the Senegalese market. And I wish to applaud them strongly in this perspective. So it's thanks to those solid partnerships that reflect the will of financial inclusion in strict conformity to the local regulations. El Mehdi El Jair, I am now turning towards you. You have a very technological vision of this question. You mentioned respect to conformity without preventing innovation. Are African fintechs ready for this? A quick answer is today no. Today much effort needs to be done by financial institutions and regulatory frameworks to adopt more and more emerging technologies, especially artificial intelligence and machine learning. Today, when we talk of Africa, of the African context, we're waiting on the duality between solid regulations and preserving this duality and walk forward together on this cooperation between various actors, between the central bank and technological actors and fintech and financial institutions. All this today, when we analyze it, we see that during the last few years, certain regulations have a direct impact on fintechs. We saw it in Kenya. Penalties applied to fintechs, to mobile money with e-payments. So there's a tax that applies for digital payments, but on the other hand, it's also an expectation to structure the market in terms of compliance cost, it's an investment. Fintech today, around 100% of its incoming on compliance. So this is something we need to manage between the giants of technology with much sensitivity, while keeping in mind that we need innovation on the African continent. We need to regulate, but in general, regulation is something that develops the market. We just need to orient it in the right way and fintechs push finance actors to use banking technologies. I'll give a simple example. Today for QOAC, we can analyze data, analyze information, and take certain indicators out on KYC and IML. So to do the same manually, it's 2-3 times as much. So now let's ask the question to a fintech David.
So David, I guess Juba has recently moved from a B2B e-commerce model to a pure fintech. I was wondering, has regulation been a big part of this shift? And do you, as Mehdi was saying, do you use AI and all that in order to do conformity?
Thanks very much. Well, maybe to introduce a little bit what we do and give context around this. JABU is a fintech that is digitizing cash. So we have a machine, we call it a JABU safe. We put it at distributors, wholesalers, manufacturers. You put money in the machine, you get instant value in your wallet. The cash is still there. And we're interoperable. You can send it to your bank account, automated. You can choose which bank, or to mobile money. To respond a little bit to your point, I've been following in French. I think the first thing that we will laugh about a couple hundred years from now is that we were talking about regulation as a nice to have, but not as a must have. As a CEO of a fintech, my name is on the line, but I think every one of our employees agrees that we need regulation. We think of fintech regulation or banking regulation like the basic tenets of society. No one is discussing whether in a red light you must not stop. That's a rule. You must do it. That's how traffic works. That's how urban cities function. It's the difference, if we go back to the old books, between the savage men and the urban men. And I think it's the reality around fintech. There are basic protection laws. Just like there are usury laws around credit cards that some countries have implemented and some haven't, no one is discussing whether we should. It's a discussion about when. And I think what we're missing is more conversations like this, but accountable conversations. Not where Visa and a fintech and a few other agencies and private sectors speak, but governments come together and agree that it must be done. Just like you cannot cross a country without a passport, you cannot transact without a KYC. Now, for my sins, I'm also the honorary consul of Estonia to Namibia. Very far-fetched, but happened to be. And I think it's
That's
really,
why you speak 7 languages.
Yeah, but I think it's very interesting. If anybody here has never heard the case of Estonia, wake up to it now. These guys have digitized their entire government infrastructure. The only thing you cannot do in Estonia is get divorced online. Because they want to make sure that you talked about it a few times, and then you can do it. So from a regulatory perspective, yes, we can push regulation and make it happen, but if we don't support that backbone with 2 things, a basic universal KYC, which I think Estonia is leading the efforts. It's a very small country, so easy to do it. But a basic digital universal KYC. How can we be interoperable if we don't even know who we're talking to? Who are you interoperating with? Yeah, there is a network, there is a bridge, but who's on the other side receiving the package, right? And the second thing is about interoperability. So the first one is about we cannot do KYC if it's not universalized. And definitely if we're not interoperable. And I was in an earlier panel where the CEO of MTN Mobile Money said that in a previous life, meaning a couple of years ago, he used to think that it's bad for business to be interoperable.
Yeah, for sure.
And I was shocked that he admitted that out loud. Because we all know that he's thinking that, but he hasn't said that. And he said he's changed his mind and he believes the network and the market will be bigger if we can all integrate. It's better for central banks, it's better for partners. But the rest of the MNOs, the rest of the banks are still thinking it's bad for business. And if we cannot connect our roads to each other, what's the point of having roads? We don't have a network. So I think those are the two things holding us back. And we really must get to that, and we must be accountable in order to do it. Fintechs are just playing their part, but there's bigger conversations.
And is it easy when you have a tiny staff from a startup perspective to follow the regulation, to be compliant on a daily basis?
We have no idea what we're doing, so we over-communicate to the regulator. Okay. We probably shouldn't from a commercial standpoint, because then you get regulated. But we'd rather do that to figure out how to get into the market. And you know what? I have a regulator sitting next to me who's completely changed my mind about how we must communicate with regulators just by listening to his structured thought process. And I think, yeah, maybe it's not good for business in the short run, because then you have to do more admin. That's what I mean by not good for business. But if you can build that relationship, you're definitely going to build a business that is falling in line with the vision of the country.
Thank you. Je repasse en français. Je reviens vers vous, Imane CHARIOUI. Vous appelez à...
I ask you to please change things in terms of insurance for fintech in order to encourage innovation and visibility. Could you please tell us more on this specific issue? Yes, of course. So Mehdi mentioned an important point for fintechs, for matching this regulation on the various markets where they are operating, and for the technical effort behind it, behind this practice of conformity to regulation. So all this has a cost, and as I said earlier, fintechs, just like financial institutions, are submitted to the same regulations, so this is a fact. But on the other hand, cyber attacks are better known at fintechs than at classical financial institutions. They are more targeted by fraudsters, so this high fraud rate in the fintech world means fintech needs to re-evaluate its insurance covering. Classical insurance doesn't necessarily cover their needs in terms of risk management as much as financial institutions. So this is an important role, something important that needs to be reviewed. So for us, regulation needs to evolve for the ecosystem, and fintech also evolve. There is an evolution undergoing. For this, we need to be proactive in terms of cover of risk management, etc., and also cyber insurance, especially with the evolution of, as our expert said, we went from PSD1 to PSD2 to PSD3, and every time another directive comes, it brings other requirements for fintech to implement technological measures that are even stricter in terms of conformity to better protect their clients. All this has a cost and needs to be covered. The needs in terms of insurance are not the same as for financial institutions. Maybe this is a lever that will help to evolve without breaking the agility required for innovation in this sector. This is my perspective. This is the call from you. If I may add an information to complete what has been said, an important point: fraud and cybersecurity in the African continent. Being a fintech on the African continent is a real challenge. On the one hand, we have regulations lacking. and also a highly challenging context. Some information to share here. On the African continent, we have 500 million people without an official identity, who don't have an official ID, who are not recorded in the civil state. I was talking with a banker in an African country and telling them they don't give enough finances for this country, but they said, listen, in those countries people can change their identity. We can give credit, and on the next day we cannot pursue them. So there is this issue of identity, and we need to know that on the African continent the cost of fraud is between 5 to 6 billion per year that are lost yearly at fintech and financial institutions. This is a real issue, and there also we are going back to a very important issue of cooperation between actors, creating regional hubs for the follow-up of cybersecurity risks, of fraud risks, and also a role for central banks to help fintechs to integrate technologies and prevention framework to fight cybercriminality. Okay, so now we're turning to our central bank governor, Mr. Michael ATINGI-EGO.
Attracting international investors, but first of all, as the central bank of Uganda, you encourage fintech and banks to work better together. What role can a central bank play in this game?
Well, thank you very much, and a very good evening to all of you. Thank you for inviting me for this discussion. Let me put it in context. The mission statement of the Central Bank of Uganda changed recently. We used to have it promote price stability and a sound financial sector. But we have had to revise that mission statement in order to be relevant to what the government is doing. So we revised now to read promote price stability and a sound financial sector in support of socioeconomic transformation. Now, that in support of socioeconomic transformation has made us rethink of our models towards finance, because if you're going to undertake socioeconomic transformation, you are lifting the people at the bottom of the pyramid at the last mile. How are you getting them out of subsistence into a monetary economy? So as a central bank, we then had to rethink, how do we invade the chaps at the bottom of the pyramid? Brick and mortar cannot do it. It's only technology that can do it. And also we knew that commercial banking models are not designed really to get down to the bottom of the pyramid. But then there are these new boys in town, the fintechs, who have a technology that can get down to the bottom of the pyramid. And therefore, how do we bring them together? For example, if you look at commercial banks, they are traditional credit models, right? You know, they're using collateral and what have you. But these new boys in the block are using artificial intelligence to price their credit, their credit to the bottom of the pyramid. So the question was, how do you get these chaps to work together so that they leave those people out of the bottom of the pyramid? So as a central bank then, we encourage a collaboration, because given the niches each of these financial institutions is serving, we saw that they need to work together to support socioeconomic transformation. So what we did, we said, hey guys, forget about competition, this traditional competition. How can you work together to create innovative platforms that address these aspects here? So we then asked them to develop financial services that are integrated, that can reach the bottom of the pyramid, and leverage on technological capabilities that each of them have to create financial solutions for those people at the bottom of the pyramid. So then we had to get them to work together to come up with products that will address that. So now we knew that that would need us to have open data, open banking, and what have you. So it means that as a central bank, we needed to develop a nuanced framework that recognizes the unique challenges that the country is facing. And this involved creating flexible compliance mechanism. For example, in terms of protecting consumer data. Because if you're going to have open data and open banking, you should be able to protect the consumer data. Your framework should be able to encourage technological innovation and also provide clear guidance for emerging financial technologies. So now these guys are working together. They have come up with joint products, all right?
Sorry, have you got a real example of, to give us right now on
Yes,
what you...
I can give an example.
Yeah.
For example, banks have liquidity, right, that they want to loan out. But because they cannot, they fear to loan out to these fellows at the bottom of the pyramid. They don't have collateral, they don't have land title, they are considered to be risky. Their traditional models cannot make them price credit to them. But they know that these fintechs are dealing with those chaps at the bottom of the pyramid. So they are wholesaling credit to the fintechs who are using artificial intelligence to price the credit to this bottom of the pyramid. So they're retailing credit on behalf of the commercial banks to the last mile, all right? And not only are they retailing credit, but they are also mobilizing savings, which they're then depositing with the commercial banks. So the evolution of micro financial products like microcredit, micro savings, micro insurance is taking place as a result of that integration of the services of the banks and the fintechs. So that is one way that have disrupted that traditional credit allocation mechanism in the system.
Okay, thank you very much. Maintenant, je me tourne vers vous, Madame Aïda et DIARRA. Je veux savoir...
I wanted to know, as a mentor, how would you perceive an investor within a startup in the continent, and especially in the fintech sector? What would a multinational group, which is originally coming from the United States, have as expectations? And what does he perceive, or what does he look into when he tries to invest in a country, especially when it comes to fintech?
Is interesting in the sense that, you know, the way we look at it is more to say every player that is in the payment ecosystem and contribute to innovation and digitizing payments and creating opportunity is one that we have to partner with, right? So when you look at what fintechs bring to the ecosystem, it is just phenomenal. It is about creating access, both from the consumer but also for the merchants, designing unique solutions for small merchants. So as we look at the role we have and the network we have, we want to make sure that we onboard these fintechs on the Visa network and create even more opportunities to digitize payments. Yeah? And we do that in different ways. I think it was last week, we were in Cape Town, and we supported the FinTech Accelerator Program, a phenomenal event where you see how innovative and vibrant the FinTech community is in, Africa. And here, what do? We put our value-added services and we make them available to the FinTechs. We train them. Sometimes we certify them to just bring that whole governance that we've been talking about earlier. And, the way we partner varies according to the need of the fintech, right? Sometimes it's a commercial agreement. Sometimes it's an investment. Sometimes it's really a training and a coaching. But, it's not whether you want or not to partner. It's more importantly, how. How do you capitalize on the innovation that these players bring to the ecosystem?
Thank you. David, I was wondering, from a startup perspective. You raised, I guess, at least $20 million from international investors. How they seize the fragmentation of the African financial regulation? What do they say to you about this?
So first of all, I'd love to piggyback on what Aïda was saying. We're actually currently part of the Visa Accelerator program, and it is an incredible way to really support her answer to you about what a big company with a big international presence is trying to do. And this is exactly what can help investors understand the fragmented market. Anyone who's thinking like in Africa, it must be African investments, staying in Africa, doing this, if you're not opening the doors to let big international players make themselves at home, I mean, Aïda is a home, but the company isn't, we're never going to create that streamlined type of ecosystem. So I think props, you know, we are already in it, and it enables us, but it also enables the conversations with our investors. You know, this takes me back. I moved to Namibia 11 years ago. I quit my job at Credit Suisse in New York, and I think the only people who understood it were my parents, because they believe in you, they raise you, they want to help you. My friends were all like, you're crazy. But when I started speaking to investors to raise money, my first business was in real estate. I was giving mortgages for affordable housing, building housing. I was trying to do anything in that space. And everyone told me, Namibia is tiny. So then you have this size of the market challenge. Jeremy, the CEO of EcoBank, was talking today in a panel, and he said he just raised a $400 million bond. An investor told him it's tiny. You're asking me about what investors are talking about, our fragmented space, about the markets, about the ecosystems. Poor dude, he's one of the biggest financial institutions out there, and he's struggling to represent $400 million, you know? So I think it's about having more of these conversations. It's about putting the big people in the room and the small people in the room, the internationals, the locals. It's about blending it. But I'll tell you what, every step you take has to come from really small projects. I give you the best example in real estate. In Namibia, for the last 15 years, they've been talking about building 6,000 houses in this piece of land. I'm sure in Morocco, in Algeria, in Egypt, everywhere, someone wants to make a 6,000 house project. These projects never kick off. It's very hard to get them to kick off. My trick to get around it when I was building housing and when I'm now building JABU is to kick off. That is the best way to do anything. And that's my trick with Visa. I'm giving it up to Aïda now. But anytime we've done something, it's been, okay, let's build 3 houses and show everyone we did that. Then let's build 20, then let's build 50. Maybe eventually, many 50-unit projects turn into 6,000. And I think it's the same with fintech. If you want to solve a problem, solve it in one house, in one road, in one community, make one savings group, make one problem fixed. And somebody will believe in you, because if you have a math problem that adds up, there's no way you will not be backed, not even by a regulator. So I think that's been our experience. It started really small. It's the secret sauce, and it's about being consistent with the small pilots. That's the only way to execute, in our opinion.
Okay.
Alors,
J'allais revenir vers vous, mais allez-y.
Ouais. Alors, juste pour revenir sur un point très...
So just to pinpoint here an important point mentioned, I recall 2 important points. The first one is to start small, and the second one is kickoff. So, of course, when we talk about this, it's actually the biggest challenge of fintechs in the African continent. We need to keep in mind today that among 50 countries in the African continent, we have about 10 of them. So the best way to really experiment a fintech and there is to register to a regulatory sandbox, and I think there is about 12 or 13 sandbox in the whole continent. So which means that today, and this is a message that I have for different authorities and central banks and monetary authorities, today when we are a fintech and we don't have a sandbox, it's very difficult to experiment. That's why we have to just let it be in the hands of the biggest fintechs in order to test certain things. So today, the first challenge that we are facing to, in fact, add to what you said, David, is that we need more sandboxes in Africa. And the second point is that we need regulations. So there is a pressure which is done by the regulation on fintechs, but it's important to keep in mind that they also have a creation effect or innovative effect. Today, if we don't have any regulations or any legislation, the industry is not have any kickoffs or a start of a fintech company. When we have a good legislative and regulatory framework, we have a whole industry that's created behind it. So when we talk about open banking, it's the same thing. We are talking about 10 to 15 countries in the whole African continent who have regulations for open banking. And even more than that, another fact which is more promising is that today, even in terms of laws and protection of data, protection of end customers, or among 50 countries in Africa, only 30 of them have laws specifically dedicated for the protection of consumers' data. So now that you're talking about the governance of data protection for consumers and clients, there are many infrastructures that are put in place, including hosting this data. Do you think that central banks are keeping in mind the different challenges that they can face with regards to data confidentiality? And is there any investments to put in this regards? I think yes, in terms of awareness, I see that central banks are more and more aware of the importance of infrastructure. But in terms of frameworks and regulations, the answer is that we are still far away. And I'm talking particularly about technological infrastructures, most particularly when we talk about clouds. So in a recent report that was published by McKinsey, where they studied and analyzed 5 major markets in Africa, and Morocco was one of them and was part of this study, we found out that the operational cost of a financial institution in an African country is 2 times the average in the whole world or globally. So which means when we set up or put in place a fintech in Africa, it will cost you twice, and they charge also double compared to the United States.
Sorry.
That's a discussion, so no problem.
Exactement. Donc aujourd'hui, quand
So today, when we are a fintech, we have what we call, we have many cloud providers, and what exists in Singapore provides us enough procurement for machines and IT equipment, and starting to have an infrastructure for IT, which is not the case for our African continent. In this continent, it's an investment, which means that we need to have millions of dollars in hand to construct and put in place a data center, because the majority of regulations are vague. Am I really authorized to use clouds or not? And this is why last week there was a panel in which I participated in Senegal. We spoke about this particular problem, and today, for the regulations, we need to differentiate between different categories of clouds: public clouds, hybrid clouds, and private clouds. When we talk about private clouds, hybrid clouds, we are talking about different types of architectures that are providing sovereignty to data. When we talk about public cloud, here we need to verify if the data center is physically within our borders or not, or outside. And regarding the regulations for clouds, the continent is not advancing in the same speed, and we have seen this particularly in Western Africa, where the regulations are more advanced. Southern Africa as well. When we talk about Southern Africa, there's something specific about it, is that they have one of the most developed infrastructures in the continent, with the presence of the biggest companies in this region. In the Western Africa, the regulation is allowing a certain degree of freedom, and that's why we have seen mobile money, which is developing today. And I can see that it's about more than 300 million of accounts in this region. We have seen many fintech companies participate in the development. I would like to continue on different good examples and good practices that we spoke about some time back. I would like to get back here on this particular point. What is the supreme example for M-Pesa in the continent, knowing that this service has historically benefited from a continuous support for this regulation? Kenya, as an example. Is there any similar example in the continent of fintechs that are accompanied intensively by regulators to be developed? I don't know if you can say today that they have benefited from support which is continuous. I would expect in the audience to have the governor who was quite implicated in the implementation of certain regulations in Kenya. I totally agree with you. The technology has evolved in a way that it has actually even exceeded or surpassed the fintech companies, and that's why we need to identify the parameters that how it has to function. So today the technology is allowing us to do many things. I will give you a simple example. I was telling this story to somebody this morning. I am in South Africa. I have my son is 15 years old, and sometimes I try to do a top-up in his card or his SIM card, and I put sometimes 300 rands, and I ask him for 300 rands of data. The operator invoices me and says that I cannot put 300 rands. He will have to put only 229, and I just paid for 230, and he replies back by saying that your son has benefited from credit, which means he was able to buy data, and we were only reimbursed on the money that you have paid. And this is what actually made me ask myself the following question. There's a practical aspect. Whenever he needed this data, it was possible for him to have access for it, but at the same time we created a form of debt which is not something that respects the values that I want to teach him as a parent. Imagine if this is going to be done on a larger scale or on a macroeconomic level. It's important to have a good regulation, but it's not just something which is impossible to achieve. What we see today, and I think many like us, is to have many discussions with regulators on all aspects, whether we are talking about cybersecurity, we are sharing with them what we can see. Whether we are talking about sandboxes that they create, we try to make sure that we are sharing with them our insights themselves, and I think this is something fabulous. They started to have certain ambitions to digitalize their services. So we have countries like Kenya, Ethiopia, who are putting in place different approaches of digitalization and ID documents. This allows for an electronic wallet, and this wallet can be attached to them, and as a result of this, the government can do deposits if they wish to provide any type of support to the population. These tools also allow to show transparency in terms of using these funds. So in the dialogue that we have with the regulators, we try to explain to them the role of fintechs, because all what is being done today with different fintechs and other other stakeholders. It's this continuous dialogue which allows to make the right adjustments when it comes to regulations and also the necessary flexibility for such innovation, and also
between all the parties in the sector. From your point of view, what channel have you set up for regular exchanges with the fintech sector, actually?
Thank you. See, fintechs are new kids on the block, so you need to understand the challenges. You may have a legal framework on how they should operate, but then you need to understand the actual practicalities on the ground. It is therefore very important that you have a regular dialogue with them. So in our case, we have a quarterly meetings with these fintechs to understand better what they are doing, what their challenges are, and what opportunities exist. So we have agreed with them on a strategic plan that what you need to grow on an annual basis in terms of meeting our objectives of financial inclusion, financial products, and what is hindering you from achieving that. So those regular dialogues, we get to understand better their problems, whether it is in the form of the regulation, whether it's stringent, or it is the way that they work with the commercial banks. The cost, for example, bank to wallet, wallet to bank, can be expensive. So we get to know exactly what they're facing on the ground. Now, at the same time, we have a forum that brings together the fintechs and the banks. And then they share these solutions, or they share these challenges. They have a technical working group, and we throw back those challenges to them that, hey guys, why don't you work together to find solutions to these challenges? Because we have a common cause that we need to advance financial inclusion. We need to promote socio-economic transformation. So what do we need to do to achieve this? Again, it's not about competing, but it's collaborating to achieve a certain objective. So regular meetings are very, very important to understand what these guys are going through. Hear from them, what are the possible solutions? And how can the solutions be implemented in the existing regulatory environment? What needs to be amended? What guidelines do we need to put in place to support what they're doing?
Ok. Alors, on arrive à la fin de cet échange.
We are reaching the end of this exchange. I would like to thank all of you. But before that, we will give the floor to the audience before our two come to give their observations. Any comments from the audience? Don't be shy.
Yes, I see one here. Do you have a mic somewhere? Maybe I can give mine.
Thank you very much. My name is Malik. I'm the General Manager of Wave operating in Senegal. My question goes to Mr. Vice-Governor Michael. Thank you very much for your insight. In fact, I have a question about digital currencies. And I would like to know what's your standpoint from a central bank perspective, what the plan is, and do you think that it could be a solution to strengthen the relation between central banks and also the fintechs? Thank you.
All right. Thank you for that question. As far as the central bank is concerned, we have had that discussion at the central bank level. We've written a concept note. We have circulated it to key players, central banks that have gone through this path, for example, Ghana, Nigeria, and our neighbors, Kenya. We circulated this note also to all the key players, commercial banks, fintechs, academicians, and other practitioners, including the Blockchain Association of Uganda. Now, we've got their comments on that concept note, And we are going to have a stakeholder meeting, right, to discuss that, is Uganda really ready for a central bank digital currency? And we have certain things already operating like mobile money and what have you. So the question is going to, because this is going to be a consultative effort. You cannot do it alone, imposing something on the stakeholders. So we want to hear from the stakeholders whether they think this is the right time to introduce a central bank digital currency or not. And then that meeting will inform our next steps. We will, of course, share with them the advantages, the disadvantages, what it means for the conduct of monetary policy, the kind of technology that you need, and all that. All that will be discussed with them. And then that meeting is going to inform the way forward. Now, what it means for fintech, certainly, I mean, first of all, it depends whether you're going to have a retail CBDC as a central bank or you're going to do the wholesaling. If you're going to wholesale the CBDC, then you need to have some chaps who are going to intermediate. Are you going to have the commercial banks intermediating that CBDC? Who are you going to bring into the field to intermediate the CBDC? Are you going to consider fintechs as well? I do not know, right? So I think that is a discussion that we're going to have with all the key stakeholders. Kenya did it recently, and the outcome of that consultative meeting was that, look, yeah, this is a good thing to do, but maybe not for now. Let it be there, waiting for the right time. Let's continue with our M-Pesa, right? So I don't know what the outcome in the Uganda consultative stakeholder meeting is going to produce. Thank you.
Thank you. Is there any question? Yes? Yes, we got to Mike.
Hello, good evening. My name is C.K. Richards, and I'm the CEO of the Africa College of Insurance and Social Protection. My question goes to the panel. We've talked about regulatory requirement as a key issue, yet there's been very little about education and overall awareness, as well as we know that, excuse me, reluctance in taking up anything innovative comes through lack of education or lack of awareness, and of course the technical gaps that exists within these areas as well. So I would like to hear from the panel how they are going about this. Thank you.
Thank you. Okay, David, go on.
I'll give you the small chap version of this, as Michael calls it. We're trying to get people to put money into a wallet. Us, our company, JABU. And in order to do that, you need to turn cash into something you see in your phone. Most people are like, no way, I'd rather use cash. What we've done, which you could say is like part of like the action that turns the wallet into a reality, is we go to the actual distributors. Our entire job, our entire business is education. We don't tell that to investors because they wouldn't invest, but pretty much our entire business is about how do we educate someone to try to do something that will be better for them after we've identified the problem. So we go to a distributor of beverage, he's going in a truck, and we say, can we put an agent in your truck? Now the agent goes in that truck speaking the language of the trader, which by the way could be a person from Rwanda in Zambia, not necessarily a Zambian. And as soon as that person is about to pay the truck driver in cash, there's this JABU employee that says, hey, wait, put the cash here for a second. Give me your ID. I'm going to show you how we can do this digitally first. And we do that like 10 times, maybe sometimes 3, sometimes 6. But it might take up to 10 times to get that trader to feel comfortable that that money he gave actually turned into some digital value that he's now paying the truck driver, and that the truck driver walked away saying, I'm happy. Today, these truck drivers are doing that for us. That's how we started. Now the truck drivers are saying, I don't want to carry cash. I have kids, it's dangerous. Every time I lose it, they deduct it from my salary. So I've been seeing this agent do this. Just give me the cash, or go to that agent, put the money in the wallet, go to that machine, deposit, and it will get digitized. But it's about creating lingua franca about digital money. And I think, there's so many people here that could give you different angles to it, but fintechs, and I think that's why he calls us the young chaps, we are trying to do this at the grassroots level, at the last mile level, and it is really changing the dynamics. And you're right, it's all about education, and our biggest cost in marketing, it's all education. It's people on the ground speaking the language. You cannot digitize this. It's a human-to-human conversation, and it requires support from the entire ecosystem.
Thank you very much, David. I think we are running out of time, so sorry for if there is another questions, you can ask them to our panelists afterwards. Merci beaucoup à vous cinq. Je vous invite à rejoindre le public.
Thank you all. Please join the public, and now I'm calling quickly a picture quickly, please, because we still have a part. The panel isn't finished yet. We have a small 10-minute part with 2 chairs. I'm calling Mr. Aivo ANDRIANARIVELO, Governor of the Madagascar Central Bank, and Mrs. Gertrude Dovela, who represents the Mozambique Central Bank. Welcome to both of you.
You point out during these discussions, is there something you want to share with us?
Well, thank you first for this opportunity of being here. A lot have been said about regulations and fintechs in this panel, in this section, and we will continue discussing it for a long time. But the way I see it is that what we are looking for is a marriage between the fintechs and the regulators, a kind of an harmonized relationship. Both, or each one has its own way of living, of doing the things. And now it's time to get together and try to achieve the main goal, which is to offer better services for the population. For African countries, I think that they need to define and harmonize the regulatory framework for fintechs. The fintech business is expanding at a fast pace, now reached by the development of information and communication technologies, which was said here a lot. We have telephones that are changing the features and the functions every day. Today we are talking about artificial intelligence, we are talking about cloud computers, and all this stuff have influence on the way we do payments. On one side, on the other side, we have also the constant change of the customer needs. Yesterday, I wanted only to go to the bank and open an account and pay my bills. But today, no. I want to be seated here and pay my bills, buy whatever in the internet. So these are the factors that change the world and also invite us to find this harmony. So these changes, they pose challenges for continuous and responsible innovation. So fintechs have to be responsible in their innovation, because at the end, the results will focus on the client. And the client was the one that the central bank have been always trying to protect. Also, the fintechs have to be compliant with complex regulatory rules. As we see now, when these fintechs comes, we see that the regulation for the central bank set list is very tight for what these new technologies are bringing. So the environment demands African regulators to adopt a regulatory framework that ensures consumer protection and reduce legal complications for the fintechs. I can give some more examples of how the Central Bank of Mozambique have been trying to find this marriage, harmonized marriage with the fintechs. To share this experience, to say that Banco de Moçambique established a regulatory sandbox and innovation hub, and we feel that this initiative created a kind of secure and regulatory friendly environment for the fintechs to test the new financial products, business models, and the innovative solutions under the eyes or under the supervision of the regulators, generating positive spillovers for both the investors and the regulator. On one side, we think that it helped the fintechs to understand regulatory expectations, because these are two different worlds. You know, as one of the panelists said here, the fintechs are the boys that they just want to see the code or the product running, you see. But then you have here a father or a bigger one that wants things to go straight, because he knows that I'm dealing with what? I'm dealing with the money of people. I'm dealing with very sensitive issue of people, so I have to protect them.
Sorry, ma'am. Maybe
yeah, I'll finish. I'm finished. I'm
Maybe.
finished. Yeah, I'm finished. Just to say, the fintechs, on one side, it helps the fintechs to understand the regulatory expectations, allowing them to make necessary changes before launching their products to the markets, and on the other side, enable to the regulator to acquire specialized knowledge about the market and strengthen the implementation of up-to-date regulatory framework.
Thank you.
So, thank you.
Thank you very much. Monsieur, qu'est-ce que vous...
Ladies and gentlemen, what do you think of what the representative of the Mozambican Central Bank just said? Do you believe fintechs are a bit agitated bodies? How do you see them? I would say, I would take the question another way. When I started working for them, it was in the 90s. To send money, you needed maximum 4 days, minimum 3 days, maximum 45 days. Today you send money 3 seconds, 3 to 4 seconds, 3 to 45 seconds. If the money doesn't arrive in 45 seconds, you panic, while you needed 45 days for this money to arrive. But on the other hand, technology is like an excited boy. In 45 seconds, you can also lose the money you sent, and this is the dilemma. Send very quickly and lose money very quickly too. How can you prevent this? Through regulation. Regulation, security of transactions between fintech. Fintech is not created by little boys, but there are rules behind that are very strict for money, so that the money sent arrives securely to its destination. If we look at what David said earlier, to put his money into a box, how could he do it? How can you make him think that the money will arrive into his account and will pay? No. But by putting clear rules in place, regulations, then it will work. And it will put the question of trust. What you said in preparation is you are you are still studying cryptocurrencies. What we are studying with our teams is regulating things and reducing costs, reducing transaction costs, because technology is quick but it costs. And without regulations, companies and establishments impose their rules, because to be fast, you need to pay. But to pay, you also need to regulate. And there is resistance here, because they say we are taxing the small people. Taxing the small people, okay, but it needs to be done only service pay, not creating riches through transaction, because profit is made by itself when we have many transactions. For it to be done in a quick way. Thank you all. Thanks to both of you. Now I will close this discussion. Thank you for all. Thanks to all of you who came today. And I wish to remind you that we have a cocktail later in this room here behind you. And then you will be able to continue the discussions. Thank you very much and have a nice end of the week.